To understand the term non-resident Indian, we have to look at three laws in India. The first law is the Aadhar Act. That means if I have to apply for an Aadhar, I will be considered as person resident in India if I have been in India for 182 days continuously from the date of applying for the Aadhar. That is for sole purpose of applying for a identity card in India. Second act is the Income Tax Act. The purpose of Income Tax Act is that all of us, anyone who earns any income in India, pay their applicable taxes to Government of India. By 31st July, we all have to file our tax return in India for the income we have earned during a financial year. While filing our tax return, there are three options that we can choose from. The first option is resident and ordinarily resident. That means I have been in India for the stipulated period of time as per the Income Tax Act. Second is RNOR, that is resident but not ordinarily resident. That means I was an NRI previously and now I've become resident in India, and for few years I'll be considered as resident but not ordinarily resident in India. Third category is NRI. If you are not a ROR or RNOR, you will be considered as NRI. Income Tax Act, it's very simple. In case you're filing your tax return as RNOR or as NRI, Government of India cannot tax you or question you for your overseas income. But if you're filing your tax return as resident and ordinarily resident, of course, Government of India can check your global income. It may or may not be taxable depending on the country bilateral agreements or many other factors, the source of income, etc., etc. So the purpose is for RNOR and NRI that overseas income will not be questioned or taxed in India. So Income Tax Act, the sole purpose is how much was your income in a financial year, which resident category you fall in, and can Government of India tax you on your income. The third category is Foreign Exchange Management Act. FEMA, the purpose of FEMA is to ensure that foreign exchange in India is managed well, that we are never at loss of foreign exchange so that we can't buy or import essential commodities such as oil, etc. in India. So it is management of foreign exchange in India. That is the purpose of Foreign Exchange Management Act. Whenever a person who is resident outside India, that means who live outside India, who works outside India, he opens a bank account in India, the relationship between that person and the bank in India, which is the resident in India person, is that of debtor and creditor. As this means that there's an obligation that is created for a person resident in India against a person resident outside India. It comes under Foreign Exchange Management Act, a relationship being set up by a person in India and person resident outside India. So that is where Foreign Exchange Management Act comes into the picture every time you open a bank account in India or do any transaction through that account. I hope there is a clarity with regard to the legal status. Now let us continue in terms of how is an NRI or a PIO defined under Foreign Exchange Management Act. Instead of going to a theoretical understanding, let me give you an interpretation of the law. So NRI, non-resident Indian, means that a person is a citizen of India. That means that person, he or she, has an Indian passport, but he resides outside India. That means he lives outside India for the purpose of employment or to carry out business or a vocation. Vocation means a profession or any other purpose that would show that he'll be staying outside India for an uncertain period of time. That means he's out of India on a dependent visa, for example. So, and of course, students, if you're outside India for studies, then also you will be considered as person resident outside India. Mind you, if you're going abroad for the sole purpose of tourism, it may be medical tourism or any other thing, in spite of staying there for more than one financial year or whatever, you will still be considered as person resident in India, not NRI, because you're not outside India for the purpose of employment, carry out business, or for uncertain period of time. Even if it is a medical treatment, you will get well and ultimately you will come back home, right? So that is a definition of NRI. Now let's talk about PIO, person of Indian origin as per FEMA. PIO is somebody who is resident outside India. I'm talking about PIO for the purpose of deposit account opening in India. So the first liners has to be a person resident outside India. That means the person is out of India for the purpose of employment, carry out business, etc., etc. He lives abroad basically. Second is, the option is that you have a OCI card, Overseas Citizen of India card, issued by Government of India. So if you qualify for PIO definition, required to apply for a OCI card, you will be given a OCI card. So you're residing outside India, you have an OCI card, and of course your passport should not be Indian, otherwise you'll be NRI, or it cannot be a Pakistani or a Bangladeshi passport. In that case, you will be considered as PIO. OCI card, foreign passport other than Pakistan and Bangladesh, residing outside India, you're a person of Indian origin, no questions asked, no problem for the banker. However, OCI card is not mandatory. Let's say you do not have an OCI card, then what happens? In that case, the bank will have to check that you qualify as a PIO because of either of these problems or either of these conditions. The first is that you were previously holding an Indian passport. So you had an Indian passport, as India does not allow full-fledged dual nationality. You'll have to surrender an Indian passport to get a foreign passport. So you have surrendered that passport. Second is you belong to a territory that became part of India after 1947. For example, Goa became part of India in 1960. So let's say technically somebody was born in Goa in 1950 or something, and they went abroad, before Goa became part of India. Technically, that person has never held an Indian passport, but they belong to a territory that became part of India after independence. So that person would also be considered as PIO in spite of not having a OCI card. Third condition is that either of your grandparents, great grandparents, or parents are or were citizens of India. Remember, if your great grandfather was born in now Pakistan or Bangladesh, but now and then they came to India during partition, they were citizens of India, right? So in that case, you would also be considered as person of Indian origin due to clause 3 of this act, of this definition. The fourth condition is that you are a spouse, that means husband or a wife of an NRI, that means, a citizen of India, or a spouse of a person of Indian origin. So either of these categories, you would still be considered as person of Indian origin. Now, these NRI and PIO, remember, are two separate legal entities. And there are some differences here and there in terms of, acquisition of property, etc. for a NRI and a PIO. Other than that, for most bank accounts in India, there is no difference between NRI or PIO except the documentation part, the KYC part for the banker. Now, this legal entities, NRIs and PIOs, how many type of accounts can they open in India? They can open savings account or they can open current account. They can also open fixed deposit and recurring deposit account. These are the four types of accounts, liability accounts, which any bank in India generally offers. Savings account, the first category would be NRE or NRO account. NRE stands for non-resident external account. NRO stands for non-resident ordinary account. So the savings account, NRO savings account or NRE savings account, they both are basically INR denominated accounts. That means even if you are sending funds from overseas to either of these accounts, your money will be converted to INR in these accounts, and then the balance, the denominated currency for these accounts will be INR, both NRO and NRE. That's a similarity. Both these are savings accounts, so banks do pay interest on just like any other savings account in India. Next thing is in terms of the purpose of these accounts. As per FEMA, Foreign Exchange Management Act, as soon as you become an NRI or a PIO, that means you become a resident outside India, you immediately have to close your resident accounts in India or convert your resident account into NRO account, non-resident ordinary account. So your resident account, the account number will remain the same in most banks, will be converted to non-resident ordinary account. In case there were some investments that you had made when you were resident in India, those investments proceeds, the redemption proceeds or the maturity proceeds can be credited to these NRO account. In case there is some inherited funds that you have inherited from your parents who are resident in India, etc., that funds can also be credited into NRO account. Remember, NRO account is for your Indian income, but it is for your legitimate Indian income. That means in case the source of fund is not legitimate, is not legal, banks are obliged not to allow credit into that account. Illegal transactions, you go and tell your bank that the source of this cash or this fund is, for example, sale of narcotics or drugs or illegal weapons. Of course, the banker will not allow. But there are certain FEMA related transactions also which may be illegal. For example, as per FEMA LRS, Liberalized Remittance Scheme, if I'm resident in India and I'm gifting you some money and you are a NRI or a PIO, I am bound by FEMA, Foreign Exchange Management Act. And as per that act, I can give you gift only and only if you are my close relative defined under Companies Act 2013. If you're not my close relative, I cannot give you a gift. A resident Indian cannot give a gift to a non-resident Indian or a PIO. If he does that, he's doing an illegal transaction under FEMA. Also, any LRS transaction, liberalized remittance scheme transaction, which is applicable for resident in India, cannot be in cash. So obviously, the gift cannot be in the form of cash. If that is the case, then of course it's an illegal transaction. Banks will not allow it. Rental income, for example, is a legal transaction. You can always credit your NRO account with your rental income or any other income arising out of assets in India. But you know what? Rental income post payment of tax can also come to NRE. We'll discuss that later, some other day. So that's the purpose of NRO account. You're resident outside India, but you have an Indian income or you had some Indian income previously that will get converted to NRO account. Second is NRE account. Purpose of NRE account is that you have earned some income outside India, you send that money to India for the purpose of maintenance of the family or for the purpose of investments in India. So you're resident outside India, you may have a family member who is in India and you want to send them some money. You can do that through NRE account. You'll send foreign currency into this account. It'll be converted to INR as per today's rate, and then you can transfer through net banking to your relative or your family member's account. Second is because India, we are very generous people. We are offering excellent interest rates on NRE deposits. And of course, our stock market, it is the only market amongst the emerging economies that's doing exceedingly well. So if you want to invest in India, buy a property in India, invest in share market, do a fixed deposit in India, you can route your money through NRE account. That's the purpose of non-resident external account. Second difference between these two accounts is in terms of taxation. NRE account, Government of India wants you to send maximum, as much as possible, foreign exchange to India. We need foreign exchange, friends. We don't have oil, we have to import oil. So that's one of the major reasons India needs foreign currency. If you're sending money to India, and to encourage that, Government of India says that whatever interest that you earn in your NRE account is exempted from income tax in India. Also, whatever money is there in your NRE account is exempted from wealth tax in India. Remember, it is only the interest portion of your NRE account which is exempted from income tax in India. So, for example, you send some money to India and credited your NRE account. From there, you invested in share market or you invested in mutual funds in India, and you had a capital gain. It may be a short-term capital gain if you sell it equity mutual fund within 1 year, or it may be a long-term capital gain in case you are redeeming your mutual fund after 1 year. There is a tax obligation on this gain, and you will have to pay that tax. In fact, mutual fund companies are told that in case of NRI, you deduct the tax at source before crediting the NRE account. Also, when you send foreign exchange into this account, there may be goods and service tax, GST, applicable on the conversion service that banks provide from a foreign currency to INR. So NRE account, it is only the interest part which is exempted in India. Is it taxable in your home country? Sorry, I will not be able to guide you in terms of USA or UK or Australia taxation. You'll have to check with your local authorities. So that is NRE account taxation. When we talk about NRO account, non-resident ordinary account, there it is an Indian income. Why will government of India leave its taxes? So whatever interest that you earn is taxable as per your tax slab in India. But hey, NRI and PIO don't stay in India. They are resident outside India, remember? What if you don't pay tax to the government of India? I mean, I'm resident Indian. My savings account interest is taxable in case it exceeds 10,000 rupees. But if I don't pay taxes, I live in India, government of India can get hold of me anytime. But NRI and PIOs don't have that option, right? So government says, the Central Bureau of Direct Taxes, CBDT, has instructed banks that they will deduct tax at source before crediting interest into your NRO account. Now, this TDS is as per the highest tax slab in India. In case, for example, your income is up to 50 lakhs, the TDS will be 31.2%. What? You're keeping more than so much money in NRO account that your interest is more than 50 lakhs? Please check. You can transfer that huge amount in NRO where interest is more than 50 lakhs to your NRE account under $1 million scheme. We'll discuss it in a while. So NRO account, whatever interest you are earning will be taxed as per the tax slab. But banks don't have to look at your tax slab. Even if you're earning a single rupee, bank will deduct your TDS as per the highest tax slab in India. Or you have an option of providing a DTAA, double taxation avoidance agreement declaration, along with the tax residency certificate of your country of residence, and the bank will deduct less TDS on your interest as per the country agreement of your respective country. For example, if you are from US, the TDS will be 15%. In case you are from UAE, United Arab Emirates, the TDS will be 12%. So banks will be required to do it as per the TRC, the date of the TRC. What your total income in India is not at all, not even close to taxable income, and still bank has deducted TDS, and you don't want the hassle of DTA, you can always file your tax return and take a refund directly from Government of India. Banks have to deduct TDS. They can't help it. Now let's move on to the third difference between NRE savings and NRO savings account, that is repatriation. How much money can you send outside India from these two accounts? In case it's an NRE account, there is no upper limit. You brought in $100,000 and the money is there in NRE account. You invested in mutual fund. The money, you redeem the money and it is now here. You bought properties from NRE account. You sold those property, paid taxes, and then now the money is in your NRE account ultimately. There's no upper limit. Whatever is there in your NRE account is fully and freely repatriable. Fully means every single penny in your NRE account can be repatriated. Of course, you'll have to keep some money for the bank's charges for outward remittance, but then that's a different story. Freely means there may be charges, of course. Freely means that you can remit it anywhere in the world to anyone you want. No restrictions, no questions asked, as long as your country allows and you're not doing anything illegal, right? Transferring to a terrorist organization, stuff like that, we'll not allow that. Except that, no problem. NRO account, it's an Indian income, remember? So while repatriating it, there are two provisions that RBI has put up. First scheme is called as current income scheme. Current income means DRIP, your dividend, rent, interest, pension. Basically, the income that you've derived from an asset. For example, dividend is derived from your investment in shares. Rent is derived from your investment in property. So that's called as current income. In case the source of your fund that is there in NRO account is a current income, there is no upper limit. After payment of applicable taxes in India, you can take out the entire amount. I think the thought process of the government is that to earn huge amount of rent or huge amount of dividend, first you have to bring that much money in India to encourage money coming into to India. Current income, no upper slab is there. Second scheme is called as $1 million scheme. That means in a financial year, whatever the source of fund, legal of course, you can remit up to $1 million, 8 crores approximately as per today's currency rates in one financial year per applicant. So sold your property, inherited some property, any money lying in your NRO account can be remitted outside anywhere in the world. There are two things that banks have to ensure. First, they have to ensure, of course, that the source of fund is legal. Maybe there was an operational error and they allowed some credit to happen in NRO account, but while remitting outside India, they'll have to be doubly sure that the source of fund that is lying in NRO is not illegal. Second, they have to ensure that applicable taxes have been paid in India. How do banks ensure that? They generally ask for a chartered accountant certificate in the said format, 15CA and 15CB. There may be cases where they may exempt that kind of chartered accountant certificate. For example, the source of fund is only interest income on NRO account, which is maintained by the same bank. The bank only deducts TDS at the highest tax slab. So maybe they will exempt you from 15CA and 15CB. That is case to case basis, banks can check. But as per RBI, they have to ensure that applicable taxes are paid in India. These were the major three differences between NRE and NRO. There are some more, but let's move on to the next part, that is the fixed deposits. So FDs can be of three types: FCNR, NRE, and NRO. When we talk about FCNR, foreign currency non-resident, B stands for bank. That is a fixed deposit that is in foreign currency, as the name denotes. It can be any freely convertible foreign currency in India as per the RBI guidelines. Banks, depending on their asset liability requirement, risk, understanding of various currencies, may offer it in different currencies. Whatever interest that you earn in FCNR is exempted from income tax in India, and the, of course, balance from the wealth tax in India. It is freely repatriable, no issues in case you want to take it outside India. You want FCNR and you want some overdraft against that FCNR, go ahead. Banks can offer it both in India as well as abroad through their overseas branch in your NRO savings account. Remember, the overdraft that you take in India in INR against your FCNR will not be able to repatriate. NRE fixed deposit, of course, interest, income, whatever you earn is exempted from income tax in India. The wealth tax not applicable on the balances held in these accounts. NRE interest rates are now up to the banks. As per their asset liability requirements, they will decide the interest rates. RBI does not regulate it. FCNR interest rates, however, are regulated by RBI in the sense that there is an upper limit set by RBI, a certain basis point of ARR, that is the alternate reference rate of that particular currency in which FCNR is being maintained. And of course, banks have an option to offer less than the upper ceiling of RBI. NRE fixed deposit and FCNR, the minimum duration is 1 year. If you break a FD in India before its minimum duration allowed by the regulator or the bank, in that case, you do not get any interest. So be very careful. If you are breaking NRE or FCNR before 1 year, you will get zero interest. NRE maximum tenure can be up to 10 years or up to the banks. FCNR maximum tenure is 5 years. Now let's talk about NRO. By the way, NRO and NRE FDs both are in INR only. NRO fixed deposit interest is taxed as per the income tax slab of a person. Banks are obligated to deduct TDS as per the highest tax slab or the DTAA declaration given by the customer. The maximum, tenure can be generally up to 10 years. Minimum can be 7 days. So these were the few features of the NRE NRO savings account and NRE NRO FCNR. Current accounts, yes, banks do offer, but why do you want to open a NRE or NRO current account? Get some interest in your savings account. Otherwise, everything else is similar, or some banks may have a higher balance requirement for a current account than again for a savings account. Banks also offer NRE or NRO RD, recurring deposit. In FD, fixed deposit, you give bank a lump sum amount and there is a maturity date for that. In case of a recurring deposit, you invest with the bank on a monthly frequency. And then there is a maturity date. On maturity, you get your principal and interest back from the bank. So these were some of the deposit accounts that we offer to our NRI and PIO customers. I hope you found this video useful. I am looking forward to creating an online course and maybe an online classroom or discussion on NRE and NRO accounts and bank deposits and investments basically offered to non-resident Indians. I would love to have your questions, your queries in the comment section of this YouTube video. Also, do let me know if you liked my video, and if not done yet, please do subscribe to my channel. Thank you so much for joining me.